the tax implications of withdrawing from my 401k or pension after a layoff? And how can I minimize my tax liabilities?
That's a great question. I mentioned taking your retirement assets with you. Okay. I'll discuss just briefly. IRAs can be accessed after 59 and a half. Everything is going to be subject to federal and state income taxes if you live in a state that also has state income taxes. You want to avoid that 10% penalty. IRAs, you can at 59 and a half. If you're 55 or older, you can choose to leave a portion of or all of your 401k with your old employer, and you have the ability to access that as well prior to normal retirement without having to pay the 10% penalty. Again, 55 or older, but you still have to pay both federal and state income taxes, and that's if you leave a portion of or all of your assets at your old employer, your last employer. You can't keep doing this with previous employers prior to that. Even if you're younger than 55, there are options to access retirement assets. We can avoid federal income tax or state income tax in most cases, but we can do things like with a 72T distribution schedule to access funds if you're even younger than age 55. And then obviously, depending on the amount of money that you might need and the length of the layoff prior to a new job, you might want to take money out in one calendar year versus, you may want to split it over a couple of calendar years versus one calendar year just to minimize the federal income tax bracket that you're in. All good thoughts.